afternoon, everyone. Thanks for joining us today. We have an update with Akiba Leisman, CEO of Mako Mining. For those of you who are new to our sessions, there will be a quick overview update on the recent production numbers as well as the exploration program that's underway. So maybe 10-15 minutes, and then the rest of the time will be Q&A. So if you have questions, feel free to put them in the Q&A box at the bottom, or you can email them to me. And this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on the website. With that out of the way, I'd like to introduce Akiba Leisman, who's CEO of Mako. Hi, Akiba.
Hey, how's it going, Deb?
Good. So you've got lots of news to talk about. It's been a while since we've had an update.
That's right. Yeah, so the mine is doing what it's doing. So we declared commercial production on San Albino July of last year. So we're now into 13 months of commercial production. This is the highest grade open pit mine in the world. But a lot of the things that we were doing with the initial 500 ton per day setup was to get this ready for the next two stages of the company's growth, is to use everything that we learned about San Albino, the geological model, applying that analog to elsewhere in the property, and then to advance some of our near mine exploration targets, the most advanced being Las Conchitas, a couple of kilometers to the south of our plant, such that we can be in a position to make a decision to expand to production sometime this year. So where we are on that right now is that we made a tactical decision to apply for a permit on some infrastructure or waste dump over at Las Conchitas first, and then once that was given, to start the application process for Las Conchitas mining permit immediately thereafter. So that was received really just a couple of weeks ago. So I would handicap us being able to start mining Las Conchitas about 50-50 this year, or at least being permitted and able to do that. So we're going to be in a position to make that decision kind of contemporaneous to when we get that permit. It could be Q4 this year, it could be as late as Q1 next year. And then from a standing start, it will take us about 8 months to expand the plant and the infrastructure that we have to really be mining at that 1,000 ton per day scenario. But really, the most important part about the company has always been what we think that we're sitting on from a regional geological perspective, is that we do think this is an orogenic gold mining camp. Every bit of data that we've been putting out really since 2019 is confirming that fact. We announced in March a $17.2 million exploration program that we intend to spend over the course of about 18 months that was really designed to do exclusively expansion drilling. And that's both immediately expanding the San Albino area that we're mining right now within our permitted pit, as well as regionally. So we have 7 rigs on site. Over the course of the last, I guess it's 2 months, maybe 9 weeks, we've announced 2 material discoveries over at Las Conchitas in areas that have never been drilled before. We have established dip and strike continuity on both of them, that clearly they're going to be individual satellite deposits eventually. And then we're well on the path of establishing a maiden resource over at Las Conchitas. So we engaged an outside consultants to help us with our geological model. And then we do think that we're going to have everything internally set by the end of this year for that resource, and then for public dissemination sometime in Q1 of next year. And really, with that 7 rig, $17.2 million program, there's just so many targets on our site that probably our biggest challenge right now on the exploration front is organizing that data and making sure that we prioritize where we're drilling. There's a lot of things that need to happen, and then decisions on how we allocate resources to that, because there's a finite amount of human capital and a finite amount of on-site infrastructure that we have to be able to do that type of exploration program. Really, that's our biggest challenge to date. Everything is just screaming out for drilling. Everything is screaming out for geochemistry. Everything is screaming out for geophysics. Everything is screaming out for plant expansion. Everything is screaming out for making this a growth company, and really is our objective to manage the process on getting there for what is a relatively complicated ore body for what we have. So while all this is going on, the 500 ton per day mine is really there to be the keystone to unlock everything. So in addition to providing enough capital to do what we need to do on the expansion front, we are paying off our debts pretty dramatically and quickly. So this slide is a little bit out of date. So I'll update it when we put out our financials out in the next 2 or 3 weeks. But right now, the principal balance to Wexford is down from 15.15 million to 6.8. It says on the slide 7.8, but it's down to $6.8 million. And then we just made another sailfish payment this morning. So I believe there's 13 payments of 205 ounces. So what is that? 2,800 ounces left on the sailfish stream currently. So both of those are getting rapidly repaid, and then the mine is generating enough capital to go and support all of our growth objectives from that point. I think everybody is aware of our management team. Jesse and his crew are doing a tremendous job really unlocking all of the complexities that we have with our 500 ton per day facility, and then using everything that we've now learned from that 500 ton per day mine, all the challenges, all the things that have worked very well, and apply that to the 1,000 ton a day scenario when we make that decision to do the expansion sometime later this year. Frank and Zoran are leading our exploration effort. So when you see us make discoveries on every 2 months out there and putting out our press releases like that, it's really coming from their work to make sure that we are able to unlock the true code of our orogenic gold mining deposit. So a little bit about our production numbers. For Q2, the mine has been operating exceedingly well. We're positively reconciling on ounces by over 10% from the time that we put out that resource model. One of the things that we are most proud of is that this is a fairly complicated ore body. The veins like to do their own thing. So being able to model this correctly in the form of a resource that we're able to mine plan around and then make sure that we deliver positive reconciliation of what we put out from that resource was extremely important for how we were managing the first stage of this operation. But the most important part about that resource estimate that we put out in 2020, or revised resource estimate, was that it has now become the analog for everything else on the property. I can't say this enough, is that the veins that we're finding over at Las Conchitas look identical to the veins, more or less identical to the veins that we have over at San Albino. Those veins look more or less identical to what we have found on Puerto Rios, 3 or 4 kilometers to the north. Those veins look more or less identical to the stuff that we're finding over at La Segoviana, as far away as 20 kilometers away from our mine. Being able to unlock the code of that geological model, which forms the bones of that resource estimate that we put out in 2020, was key on how we're going to be applying doing this incremental and phased approach to expanding the operation while we bring in these satellite deposits and while our exploration program is ongoing. So our ability to put out credible resources where we have the utmost respect for the technical data that's coming in, I hold up our technical numbers against any junior or mid-tier mining company that puts out public information today. With respect to resource estimates. I really do. I think we've done an A+ job, both internally and then through our outside consultants of Mine Development Associates and Steve Versercelli, who's since retired. Now, a few of the things that we're still working on from the 500 ton per day operation is that there's a part of our ore body that is preg-robbing. It's carbonaceous in nature, and we have to be very, very careful on how we're going to be mining it. So you can see our recoveries were down to 74.5%. For Q2. I think in an idealized environment, those recoveries really should be in the low to mid 80% when all is said and done. So we're probably about 800 basis points below where we want to be. A lot of that has to do with how we're handling the cyanide in solution for our recycled water. This is a mine or this is a plant where you want to make sure that if you apply cyanide to the system, The first time that it sees any free cyanide in the system is when that slurry is in the CIL tanks. So when we apply it with recycled water back to the mills, it's not good enough to reduce your free cyanide levels from 350 ppm down to 10. It's not good enough to go from 350 ppm down to 8. You want to get this down to 0. And in order to get this down to 0, there's a lot of minor adjustments that need to be made into the plant. And the long-term solution is to actually build a large tank where we can actually mix the solution and make sure that everything is killed, all the free cyanide is turned to cyanate, and then we can apply that back to the mill. There's also a few things from an optimization standpoint that we're handling right now. It will take some time. Now, what we can do before then is that we have very detailed sampling mechanisms that we know what type of material is problematic and what type is not. We are segregating that material, and then really for, let's call it the next couple of quarters, we intend to batch process the high grade nature of our gold, and even adjusting some of our mine plan to try to defer some of the highest grade parts of the mine to when everything is fully optimized. So you can even see in some of our numbers over here, the 12.85 grams a ton gold for the diluted vein material over the mine. That was intentionally lower than what it was in the last couple of quarters, which was more like 16 or 17 grams, because we did push a lot of that high grade back until we actually had a much better handle on some of the metallurgical issues that we have on the plant. So this is going to take probably about 3 or 4 months to fully rectify. We kind of know what the issues are, and then some of the optimization stuff that we're going to be doing with the plant, people will start to see starting in Q4. But I would expect similar issues to occur for Q3. But even with that, the mine is still generating a lot of cash. You can see from our Q1 numbers, we generated $8.7 million in the quarter from a mine site cash flow perspective. We were able to repay $4.6 million of principal just for the quarter. Principal payments were continuing this quarter as well, even with reduced gold prices as such. And we've even started a share repurchase program where we've completed 2 million shares of repurchased equity really since inception, which really began, at least on the share repurchase perspective, earlier this year. So all of that led to $8.3 million in adjusted EBITDA for the quarter in Q1. To put that as a frame of reference, that had an average gold price of about $1,866 per ounce. So now that we're at about $1,750, $1,760, just to kind of frame what the profitability of the mine is looking like. So bear in mind that we are in a lower price gold environment than we were in the last couple of quarters. Hopefully that reverts. But you can see the nature and the level of profitability that we have, even at a 500 ton per day framework. When we make the expansion to 1,000 tons a day, there are going to be some operational synergies associated with it. So doubling production is going to more than double cash flow, all things being equal. So there's a lot of incentives for why we're going to be making that doubling of plant capacity over the course of the next year and change. Now, the big part about the company is our exploration program. You can see San Albino, even that yellow blob that you see that's labeled San Albino, that is the overall footprint of the permitted pit that we have over at San Albino. We are mining less than 30% of that yellow blob between the west and the central pit. So even the resource that we put out was a tiny fraction of San Albino. San Albino is a tiny fraction of the overall system. Las Conchitas is an area about 5 times as large as the permitted pit area that we have over at San Albino. And Las Conchitas is a small component of the overall system. We have 28 kilometers of what is rapidly becoming tested strike that shows gold continuing throughout our property in these veins that have a pretty frequent periodicity associated with them. Every 50 or 60 meters, we find another one of these auriferous veins that have a very, very similar morphology to what we're mining right now over at San Albino. And the intent is to block off satellite by satellite to the mine for the next years, decades to come. So breaking this down into long section, just to kind of put in perspective what the geometries that we're talking about. These are shallow dipping vein structures that makes it amenable to open pit mining. They are relatively narrow veins, so it does require a lot of drilling for us to be comfortable with the resource that we do put out. So to put that in perspective, there was about 85,000 meters of drilling that went into the 4 veins that make up the San Albino deposit. Over at Las Conchitas, as of today, we're at about 51 or 52,000 meters of drilling since inception. And then by the time that we put out, or at least close off the database for the Las Conchitas initial resource, there will be a similar amount of drilling to San Albino. Now, even with that, just in the analog to San Albino, 80,000 meters led to a 270,000 ounce resource over there. San Albino is completely open along strike and down dip. And just like that, Las Conchitas is going to be incremental in nature. We'll start with a resource and we'll be able to expand it over time. So one of the knocks that Mako gets in the public markets is like, whoa, why is your resource so small? Oh, why are you trading it at X level relative to how many ounces you have in the ground? It's because we do things in a systematic fashion. Now, it would be wonderful if we had an ore body that had very, very thick vein structures that were vertically dipping, so you can block off a lot of tonnage per vertical meter and be able to get controls of it down dip. It's just not the nature of our geology. The nature of our geology is that it requires a lot of drilling, it requires a lot of drill pads, it requires a lot of access, and it requires a lot of information for us to be comfortable with the resource. We will always have a relatively short mine life relative to the throughputs that we have through the plant, just because the main constraint is being able to drill out these analogous satellite deposits to San Albino and do it with an approach that we're actually comfortable with the data going forward. It is what it is. There's some good and bad things that come with it. The good thing is this is very low risk exploration. We kind of know what our targets are. There are literally hundreds of targets that are just begging to be explored. And there's some negatives about it. There are some investors out there that need to check the box. They have certain heuristics that they need to follow in order for them to make investment decisions. And this is not the type of asset that will check some of those boxes. So that does make us a relatively controversial story in that regard. So as investors, I always encourage you to make sure that you understand what you're investing in. But it's not like things will be changing over the course of the next few years. What you've seen us do, and you've seen us execute since 2019, since the management changes happened, will be what we do over the course of the next few years on how we're going to be expanding this mine methodically, incrementally, and rationally based on the data that we get from the deposit. Now we've broken up. Yeah.
Oh, sorry. I was just going to ask, how many veins have you identified at Las Conchitas?
We don't know, right? So that's a big question about whether these are the same vein structures as well. We think we have 6 of them defined, but that could be less, and that could potentially eventually be more. The new discoveries that we've had over at Crucita and Mino Francisco did not make sense in any of our stratigraphic models. They look like they're very separate structures. We were expecting in our model veins that we knew about, and we hit them. This is something different. So those they do look like they are virgin discoveries. That being said, we're always open-minded in that there could be some strange faultings going on to the south that maybe they are the same structure at the end of the day. At the end of the day, though, it doesn't really matter, right? So these are going to be distinct satellites where we're going to be mining. What we were finding on the new discoveries over at Las Conchitas, we do think is analogous, not only as we expand Las Conchitas and areas directly around San Albino, but it will be like this elsewhere on the property. We will find deposits, we will find pits. At the end of the day, will contain 50 to 100,000 ounces as a number, and we'll find a lot of them. It is going to be very unlikely that we're going to be finding any part of our property containing a single pit that will have in excess of 500,000 ounces. This is not the nature of what the geology is about. But that is a very different thing than saying about whether we believe that this is going to contain millions and millions of ounces of gold when all is said and done. Everything about the data is just screaming that this is going to be an orogenic system that does have that potential for that type of inventory. It's just going to take a long time to go and block out resources anywhere remotely like those levels.
I have
so as we
yeah sorry to interrupt. I like the other graphic, so I wanted to ask you when you still had it up. In terms of the maiden resource that you're planning on putting out, I believe in Q1 on Las Conchitas, what are you planning on incorporating? Because Las Conchitas is a fairly sizable area. So I know you've identified several zones within that. What are you currently conceptualizing for your first resource there?
So in terms of what is going to be included, anything that we're comfortable about putting an economic mine plan around will be a resource. Anything that we're not comfortable putting an economic extractive plan around will not be. It will be, again, analogous to what we did over at San Albino. One of the biggest misconceptions about that resource that we put out is that there used to be a resource on the permitted area over at the San Albino pit, about 900,000 ounces, mostly in the inferred category. A lot of those ounces were phantom, just because there were liberties that were taken in the geological modeling over here. And I really do caution investors when they take a look at public companies putting out resources. I think there's a lot of companies that do excellent work, and they should be commended for that. But I do think the significant majority, I would say, of mining companies, and I don't even put this into the junior side of things. I actually do think the seniors fall victim to this as well. They do have data that's there for promotional purposes. They have data where they want to hit certain targets in terms of resource size, grades. There's a lot of things that you can do in how you're making modeling decisions that influences the inventory and the grades of the deposit. And I think this is a very technically complicated industry. It is what it is. So it does require third parties to take a look at it. But I do think when investors have that type of data in front of them, there's just so much that's out there that people like to take shortcuts in their mind about what is something that's conservative and what is something that is aggressive. So people will say, "Oh, this company did a resource at 1,750 gold, and this company did a resource at 1,600 gold. Therefore, that 1,600 gold is more conservative than the 1,750 gold guy." That is not what makes something conservative or aggressive in this industry. It goes back to the internal plumbing on some of these deposits, especially the narrow vein, high grade deposits that are out there, where you can make vast changes in how you're going to be modeling that with very, very subtle changes in how you're handling the geological model. So when you take a look at juniors that put out resources that don't even contain any geology associated with it. I've seen resources that really just stringing gold assays together. You can make major changes in the overall inventory grade, the attributes of what a resource looks like. It's because this is a technically complex industry. It allows for managements to make decisions for promotional purposes within the frameworks of 43101. So I'm not even accusing anybody of going off sides on that. Within the frameworks of 43101, you can make vast modeling choices and decisions about whether you want to mine this and be able to positively reconcile like we have, or whether you want to be able to market this by getting an investor to invest in your story. And for us, is like, look, our objective over here was always to get this up and running. We make sure that when we put something out on paper that is adhered to. And then also we're in an envious position is that we have and we've had a financial backer that has supported us through some very difficult times, really going back a decade now, where we didn't need to rely on the Canadian business model, which is raising equity from the marginal investor out there. We were able to just concentrate on how to develop a rational business strategy over here, and you can kind of see how we've executed on that over the course of the last 3 years. But we're always going to have our naysayers out there, just because we do things differently than what the traditional junior mining company is going to be doing.
I guess the question could also be asked about drilling density, like which regions in Las Conchitas have you drilled extensively enough to come up with a resource? Because obviously you're going to have like areas that you're working up to be included in a later resource or whatever. I mean, yeah. So yes, like Biokun's been an area that I think you've drilled pretty extensively. That's a bit higher grade.
Yeah, so to frame that, I think now that we actually have an understanding on how things behave, looking back, and you really can only do this with hindsight, I think we went a little bit overboard on San Albino, to put that mildly. So a little factoid about drilling density data on that. 51% of our blocks in the resource model are based on information coming from composite assays that are within 10 meters away. So that's it's kind of a fancy schmancy way of saying that our drilling density there is more or less 10-meter spacings for San Albino. For what it is, because even at the 10-meter level, you don't have like exact controls on this complicated geology. That the veins can do something on a meter level basis that are just impossible to model. You really just have to mine it when all is said and done. But in terms of having good quality data that was there, you could probably extend that to maybe 15-meter spacings and still get the same more or less quality data than what you had over at San Albino. And I don't see anything behaving much differently over at Las Conchitas. So that 85,000 meters of drilling that led to 270,000 ounces of open pit and underground resource over there, as a number, you can probably reduce some of that drilling density a bit, but it's still going to be something that needs to be drilled with a hell of a lot more drilling densities than what you would expect, let's say, in a very well-controlled, intrusive, disseminated porphyry system, or however you want to define it, for something where the deposit, I think, is more continuous on larger scales. That's the nature of the beast. That being said, we got to do it, right? So we're mining these veins, and then if we're going to be publishing a resource, even if we're going to be using the internal data, we do need to be comfortable on how we're going to be having the plan. Now, what gets incorporated in Las Conchitas? It's everything that we're comfortable with, and if we have to zero out an area because we're not comfortable with it, because the geological model is not making sense in a particular area, like we had in some of the satellite pits directly within the San Albino open pit, then we'll assign a 0 to it and come back to it later. That's okay. That's something that people need to keep in mind. This deposit had the most amount of gold in it 350 years ago, before anybody knew about it. The first resource that was put onto this deposit was 900,000 ounces. It had less gold at that 900,000 ounces than it did 350 years ago when there was no resource on it. Now that we actually have a resource of 270,000 ounces, it's the same amount of gold that was there when there was 900,000 ounces. It's the resource there is an estimate. It's not defining how much gold is in your property. It's defining about whether there's going to be a rational economic extractive plan within an area where you have enough data density to make that call. And I think people, like, it goes back to data complexities, that people want to make decisions because they have a piece of paper in front of them. It just makes their minds more comfortable to do that. But sometimes you do have to take a step back and what exactly is reality over here? And does the data support reality, or is the data something that's superfluous, or is the data something intending there to kind of frame a marketing approach from the company, or is the data intentionally there to deceive? I've seen all of those models in this industry. For us, it's data that we can be comfortable of eventually extracting based on the data that we know at that point in time.
Okay. I think I interrupted your flow to the next slide.
yeah, no worries. So we've broken up apart our regional exploration into categories. Really, the only reason is to kind of organize the data. So anything that you see in pink, that's a resource today, inclusive of an actual resource over at San Albino. But if we wanted to put a resource on Bayakun, Mango Limon today, we could. And then there's the areas that we know is going to be a resource, but it requires a little bit more drilling for us to get comfortable with. And that's the area that we've actually made the two discoveries over the last couple months, that orange part called Las Conchitas North. And then all the pink area, all the yellow areas, those are where we know about. We've We've been able to prospect, we've been able to sample, we've been able to develop drilling targets that are just screaming out for drilling, but it's a question about prioritization about where those drills are going. Right now, of our 7 rigs, 5 of them are associated with Las Conchitas, 2 of them in the north, 2 of them in the central, and 1 of them looking for extensions over at the south. And the other 2 rigs are over at the San Albino area, looking for those satellite extensions within and immediately outside the permitted pit that we have over in the southwest that was completely zeroed out as part of that 2020 resource. We know that there's going to be deposits over at Puerto Rios, especially on the other side of the river, and we know that there's going to be deposits over at La Segoviana, but we have to prioritize about where we're putting those drills. And right now, the top priority is making sure that we actually have 2023 mill feed for what is likely going to be an expansion of that mill for next year. And you can see it right here. I mean, I got a question on social media. It's like, wow, you're going to have 85, 100,000 meters of drilling over at Las Conchitas before you put out a maiden resource. Oh my God, that's a lot of drilling. Well, that may be true, right? So, but you can see over here, Las Conchitas, even though it was discovered in 2011, there's virtually no drilling over there. So this program kind of picked up in earnest in 2019, and you can see that it's expanded pretty dramatically over the course of the last couple of years. So in terms of a time frame of blocking out a resource over at Las Conchitas, really has been recent when most of that drilling has come in. And like I said, we just crossed the 50,000 meter from inception, and then just because it takes time to get the geological model understood and agreed upon internally with us and externally with our consultants, at that point in time, the drilling is going to continue, and we're going to have a cutoff date on our database likely very early next year, and then we'll put out a resource which is just going to be a snapshot in time, and then we'll expand the Las Conchitas resource over the course of the next few years beyond that.
I have a question. So it's taken you kind of four years to go from like first exploration hole at Las Conchitas to potentially putting out a maiden resource. Obviously, some of that was under other management. How do you foresee your new targets and new target areas advancing in terms of timelines? So like Puerto Rios, Segoviana, other areas that you're currently targeting, like wildcat drilling. How do you see those advancing if you continue to get promising results?
I'm trying to think of look at a good picture for Segoviana. So first of all, I wouldn't call them wildcat drilling. Like we've been able to have underground access to some of the small scale mines that are in the area. We did a land deal with the largest small miner on the entirety of our property. So he owns the surface rights. So we have a pretty extensive surface rights acquisition agreement with him going on for the next almost 2 years to acquire the real kernel over at La Segoviana. So a lot of that was done in preparation for us to accelerate our drilling program over there. Anytime that we make a decision to go on the other side of the rivers, so to the north of Rio Jicaro and then to the south, the Susuquian River, it's going to require dedicated infrastructure in those areas. So it's not like we can run everything out of El Jicaro if we're going to be drilling over at La Segoviana. During rainy season, it's an hour drive. You can probably get back and forth in dry season in about 40 minutes. It's just not conducive to a good quality exploration program. So first and foremost, we need to be in a position where we're making the decision that, all right, we can have our infrastructure in place and then dedicate enough drilling rigs that are out there to do resource delineation programs on all of them. Like I said, I don't think there's anything materially different about the veins over at La Segoviana versus what we have over at San Albino, and you see how much meterage we need to drill before we actually have a resource for 5 rigs. That initial resource over at Las Conchitas is going to have 85,000 meters in place on 5 rigs. So when is the decision point for us to say, I want to move that kind of capital, so those drilling rigs from what we have over at Las Conchitas, and then move them up north to have a dedicated program to do some resource delineation. It's kind of hard to say, but you can. It almost doesn't matter, right? So for us, the property has a series of veins that tend to repeat in pretty predictable fashion every 50 or 60 meters. And then we'll make the decision based on where the data is going. But for us to be in like a resource delineation mode over at La Segoviana, we really need to justify is like, all right, are we done kind of like figuring out everything that's there for Las Conchitas? And when we do that, then we can dedicate those rigs to that. So it's going to be a while before we actually have a resource on La Segoviana or north of the river over at Puerto Rios. But that being said, this is not wildcat drilling. Those are targets that we've been able to sample and inspect. Those are targets that we've been able to look at underground structure. We'll be able to see how the vein lies from an in situ perspective. We've had our geologists take a sample. We can see how the vein behaves. There's enough of these exposures that you can link them together over pretty large distances and make some inferences about what the strike and dip potential of these things are. So we can say emphatically that those are deposits. We just need to dedicate the human resources, the drilling capacity, the actual rigs, and the ability to model it at some point in time. But if that happens in 2 years, great. If it happens in 4 years, going back to what I said earlier, guess what? The goal is still there. And then it's just a question about making prudent decisions on when the next source of mill feed will come from.
Okay. And I'm talking about mill feed. I believe you mentioned that the timeline to 1,000 tons per day was just over a year. Is that correct?
It's going to be it'll be an 8-month standing start from the time that we make a decision to expand. That decision to expand is going to be made both in terms of when we're comfortable internally with the resource model over at Las Conchitas and around the time that we get permits. On the former of that, I think we can probably be there by the end of this year. On the latter, I would say 50-50. We get permits this year, but if the only reason why it gets pushed into next year is because that tactical decision that we made to permit the waste dump first. So if not, then it'll be early next year, and then you would add 8 months and let's call it $4 or $5 million on top of that to actually invest in the CapEx expansion to our plant.
And you talked about synergies with doubling the throughput. What does that mean for cash costs? Have you modeled that out? Do you have any guidance?
Yeah, obviously it depends a lot on grade and recoveries coming out of Las Conchitas, which the only thing that we could say is that it looks identical to San Albino on both fronts. So assuming that's the case, back of the envelope, we do think that the marginal unit of ore would quote unquote ore would wind up having about 25% lower costs. So if you take 500 at 25% lower costs and 500 at the same costs, then you get 12.5% reduction in overall cash costs. But obviously that's very early days and should be treated as a back of the envelope calculation.
And independent of inflation.
And I didn't say 12.5% from what, right? But yeah, but actually, even from that, most of the inflation impacts that we had was in Q1. So we had our all-in sustaining costs go from right around $900 an ounce to just over $1,100 an ounce. I do think about, so let's call it roughly, I think it was about $220 increase quarter over quarter. About $140, $150 was real inflation that we experienced in Q1. And the other $80 was kind of like weird modeling decisions that our external auditors suggested that we do. But we did definitely experience about $140 or $150 an ounce quarter over quarter inflation costs. That was pretty much it. We really haven't seen much from a unit cost inflation perspective for this quarter. So the main impact has already happened. And then who knows what the world is going to look like 2, 3, 4, 5 years from now.
Yeah. And can you talk about possible return of capital once the Wexford is entirely paid off? I know you've got a share buyback in place. Maybe you can elaborate on plans there, plans for dividend.
Sure. So as it relates to Wexford portfolio companies, as it relates to actually even any public or private investment that Wexford is involved in, where they have a significant amount of influence over, there's no need for war chests over there. So we've been criticized for, and I think rightfully criticized for having I should say rightfully criticized without the proper context for having a low cash balance on our balance sheet. But that's kind of how we run our companies. So it's okay to actually run things kind of with low cash balances, knowing that everything else, first and foremost, goes to the investment in the underlying businesses, right? And our business is this three-stage approach. This is getting the mine up and running, so the capital is available to do that. It's making the expansion decision. The operating cash flow coming from that 500 ton per day facility is there to finance that. It's the regional exploration program, $17.2 million over the course of about an 18-month time frame. There is capital that will be financed from that, and then everything else is there for capital returns in one form or another. The priority on the capital return is getting the principal repaid over the debt, and we're now approaching close to $12 million since the mine turned on, at least from a commercial perspective, last July, and that was after spending everything that we needed to do on the exploration front, which is in and of itself in that time frame was close to $9 million bucks. And then after the debt and the principal is repaid, then everything else goes to shareholders. The discussions that I have with shareholders, the discussion that I have with the head of Wexford is the same thing. It's that I think there's a preference for dividends, irrespective of tax leakage over there. I think there's it's much more healthy respect for getting a dividend check in the mail than having kind of a loosey-goosey NCIB outstanding. The one thing that I would say to that is that if you're going to be announcing a dividend, you better be sure you actually have sustainable operations to support that. So we do need to have some visibility about what our real intermediate term mine life is going to be, which will include bringing Las Conchitas into the fold. And once that happens, and once we have visibility, sure, anything that is beyond what's necessary to invest in everything that is out there that will generate returns on capital for the internal investments that we make. Anything beyond that, which by the way is basically everything. We are not target constrained. Like literally every single target that we can go after, we are going after right now, and the mine is able to support that. And once the debt is repaid, and once we have visibility, then great, all of that will get returned to shareholders, because there does not need to be a war chest on our balance sheet.
And how does M&A fit into this strategy? Is there a preference towards shareholder returns or M&A?
Well, I think they're unrelated. Right. So if there is a merger, an acquisition, or even a sale for that matter of merit, it should be looked at in the context of where those companies are capable of financing that. So whether it's a cash acquisition where we need to raise equity for, or it's a merger where two companies are exchanging shares, it's the same thing. It's like you have to look at, does the acquisition or merger or sale for that matter make sense from a shareholder's perspective? And then there's a completely other side of things, which what does the ideal structure of a balance sheet look like? I would fully acknowledge that if it wasn't for having a large scale, deep pocketed investor like Wexford there, the company's ideal situation would actually be a balance sheet that would be more robust than we have right now. It's the fact that we do have that shareholder in the background that we can take a little bit more risks on how that balance sheet is managed. But it's not like I really want this M&A to happen, but the only way that can happen is if I defer dividends for 3 months, and then that will give me enough money to go buy that. It doesn't. The world doesn't work like that, right? So they're two completely separate kind of decision points. With respect to M&A, I do think that even if we were able to execute on everything that we wanted to execute on Mako and San Albino, we're still too small of a company, right? It's not like, I find it difficult to envision our plant getting much like our 500 ton per day plant right now is actually running at close to 600 tons per day, assuming 100% availability. So even that on a net basis is about 530 a day, and then 1,000 tons a day, you can basically double that. So you can probably get it a little bit higher than 1,000 tons a day. Beyond that, there's just not room to expand it, and we're always going to be behind the curve on when we're going to have a mineable resource. So this is not going to be more than a 80,000 ounce a year producer in the expansion plan. I think that's too small of a company to be ideally situated in the public markets. I've said that since 2019. So how that gets rectified over time will be kind of when opportunities arise, and we're always indifferent on whether it's us buying something, us merging with somebody of similar size, ideally without diluting the quality of our assets, especially if there are particular synergies associated with that, or eventually to sell. It's just where the opportunities lie, and whether the splits or the actual purchase price makes sense.
Okay. The only other question that I had from audience participants was getting an update on Sailfish.
So Sailfish it's kind of like an interesting company at this point, right? So you have this royalty that's paying from San Albino. It is what it is. It covers kind of all the overhead over at Sailfish. There's this gold loan that's there to buttress what's now a 5.5% dividend yield that has now, I just mentioned that I made a payment this morning, so I believe it's 13 payments of 205 ounces. So that's enough to cover the I guess close to just under $4 million a year of dividend payments that Sailfish is putting out. And then you have this like large royalty on a 5+ million ounce deposit in Nevada in a grade A jurisdiction that's basically just waiting for a home. It's held by a private equity company that is it's their right to do it. They're tactically quiet about it, so there's not much information out there. They are drilling the heck out of that deposit. And like obviously there are huge differences in terms of deposits size and quality. But we've had in the last 3 months like a couple of these single royalties that have traded for crazy prices. I don't it was actually one particular buyer on 2 separate royalty assets. But if you actually look at what our royalty is capable of doing, it's in the same snack bracket as those 2 royalties that just traded in the last month and a half. So if you put like a value and haircut it for all the reasons you want to haircut it, that's a big component of Sailfish's value. So to me, and then there's the Swordfish spinoff, which kind of want to like bang my head against the wall about how difficult it is to get these small scale assets like spun out. Hopefully we'll be able to do that over the course of the next few months. But really, if you actually just distill what Sailfish is, you're being paid 5.5% a year to wait for an event that you, as an investor, there's a lot of risks that you're taking, but in terms of risks that are out there, you basically have a pretty clear end game for what the end result is. But it's like it's a waiting game that we're not entirely in control of.
Do you think Spring Valley has to be spun out of Waterton, put in its own entity, something like that, go into the public markets in some capacity for somebody to have real interest in that royalty?
I think there definitely needs to be public information on that asset. I think one of the reasons why um, I don't want to speak like good or bad about anyone. So like Great Bear, we'll talk about on the royalty side of things. Fantastic discovery, home run. Everybody should be super congratulated for what that is. I do think that the royalty was revalued both from an investor's perspective and without speaking for a competitor royalty company, Royal Gold, I do think that royalty was revalued because it was in the hands of a senior, Kinross, in that circumstance. So having a world-class project, even a non-producing one like Great Bear, winds up becoming valuable if it's in the hands of somebody that can advance it with technical abilities and capital coming to the table. I think the private equity owner is an entirely reasonable owner, but they're not the best owner for Spring Valley.
That makes sense. I'm not sure if I cut off your presentation at all, Akiba, if you wanted to talk about anything else. I don't see any other audience questions at this time.
I'm not entirely sure there's anything super new to talk about. So we're drilling kind of at the extensions of Limon and Mango right now at Las Conchitas South. I would say over at Las Conchitas, one of the things that's starting to intrigue me more is that we are finding stuff to the west, float that frankly doesn't belong there unless there actually are other veins that are located in that area. There's geochem anomalies, so I'm pretty sure that we're going to be finding some other material discoveries over at Las Conchitas in general, even beyond areas that we know about. It's just it's a large area that we need to get control of, and we need to poke our nose around some of the areas. And then I'm waiting for us to get some drill rigs over at La Segoviana, because that really does look like it's holding together based on the access that we have on multiple points. And now that we actually have the surface rights under control, I really do believe that there's going to be another deposit there. So, I mean, the only thing I could say to shareholders is that we do things incrementally. So when the markets are in a bull market, everybody gets super excited when we put out incremental stuff. And when the markets are on a bear market, it's like, oh my God, it was Mako guys again. They're putting out another press release. Oh, geez Louise. It is what it is, but it's not like we've changed anything from 2019. So you just have to understand that investors' attention span are generally shorter than the life cycles that it takes to develop assets. And the way that we're developing our assets are actually a lot quicker than what a normal junior mining company would experience. So if your attention spans are shorter than what we're doing, I would caution you on why you're investing in this industry in the first place, because the projects take a long time to develop. And if this is really just from like a speculative perspective, there's nothing wrong with like a speculative perspective is like looking for discoveries, looking for stocks to go. I did that professionally for a long period of time. Nothing wrong with that. But don't confuse that behavior with being an actual investor, where to me the definition of investing is putting money in, then getting money out, and ideally making a return on that is commensurate, if not more, than the risk that you're taking before you put it in. It's not buying a stock that goes up and selling it 100% higher, even though there's absolutely nothing wrong with that. That's just not investing.
So with that logic and mentality, have you considered taking the company private?
The problem with that framework on let's like, what does taking private actually mean, right? So you have to say, all right, what exactly is the price tag that we would need to get the the minority shareholders to agree to, and can we finance that in a prudent fashion that the returns that we would have on the marginal dollars at that premium, can we earn money on, right? And we're in a country and we're the type of mine where financing alternatives are not extensive. It's not zero. I mean, we demonstrated that we were able to get third-party financings, but it's not like we're going to be getting a leveraged loan desk to give us money to go and buy the minority. It's just not in existence. So then you have to ask, all right, well, what do you actually mean by taking this private? What you mean by taking this private is that, oh my God, you've done this for the last 3 years, and the stock is like, even by the way, the stock is 2.5 times greater than what it was when we started this. So it's been a fruitful exercise for shareholders that started when we actually started investing dollars into the project. But it's usually a question that's saying, I made this investment in the market and it's not behaving the way that I expected it to behave. So is there a way for me to seamlessly get out of this? That to me is a question where it's not an unreasonable question to ask, but it's not looking at it in the framework of a takeover. So to me, the entire industry has gone through a pretty extensive drawdown over the last few months. Sentiment relative to where the commodity is trading, I don't think we've seen it this bad. Certainly not since 2013, 2014. It's been a pretty awful bear market. But luckily, we haven't needed to raise equity capital for, what is it now, 25 months. We haven't raised external net debt capital for 17 months now. So it's like, all right, so stocks go up, stocks go down. It's cheaper for us if you actually wanted to go the approach of looking at this from a takeover. It's just cheaper for us to go and buy the stock back when the stock is weak. We have been doing that incrementally. Once the debt is repaid off, we can do more than that. But I do think people need to question why they're asking that question. Is it a rational leveraged finance matrix that they're asking that question about, or is it because they're frustrated with the stock?
Fair enough. And I had one question, which you mostly answered, but it's asked slightly different. So I'm going to go ahead and ask it again, which was, if you decided to expand the mine on January 1st, how long would it take to build it? I know we talked about timelines to double production, but we didn't actually talk about construction. So maybe you can elaborate a little bit on that.
Yeah, it'll take we're guesstimating that it'll be about an 8-month build process. We kind of know what we need to get. The longest lead item is our filter press. So all of the actual construction will wind up getting finished likely before the press is delivered to site. You can see on my Twitter feed from 2020 and 2021, what it was like to build a filter press while getting smacked by two hurricanes, from soup to nuts. That took 4 months to get done. I think in a normal time frame that would be about a 2-month process. But that's all within the 8-month window that we think we can get it done at. But the decision point is really determined by those two things that I mentioned earlier: getting comfortable that there's the mineable resource over at Las Conchitas, and then having full visibility on when we can actually get the mining permit over at Las Conchitas. I view that as a coin flip of happening in 2022. But if not, there's really no reason why it shouldn't happen by Q1 next year.
Okay. That's it for audience questions. We're coming up on the hour. Maybe you can just list the upcoming catalyst and news items the market can expect. I know you've got your Q2 coming out in a couple of weeks, continued exploration results. Maybe you can just lay out some of the milestones for investors.
Yeah, I would venture to guess that the next news release will be associated with our Q2 earnings. I think we put out our production numbers. I don't think there should be any huge surprises on what those are going to be. And then while all this was going on from the drilling perspective, we've been prospecting all around our property. We'll put out those results over the course of the next 6 or 7 weeks. Beyond that, it's now been one of those signs. It's now been 6 days since you've announced a discovery. So So we've been putting out, I think, discoveries of new areas like every 2 months right now. There's going to be more. I mean, there's stuff that we don't know about that we're targeting and drilling right now. At the very least, it's going to be the extensions of veins that we do know about. And those will get released in due course, like we have been since 2019. And this goes back to how public markets can play with people's minds, is that people can take issue to our style, business model, what we're doing. But in terms of actual execution and data and being able to analyze what's going on here, we had a plan in 2019. We delivered on the plan. The incremental information that we were giving in terms of project build out and exploration work has basically more or less come to fruition. We do it very frequently so people can wind up making their own decisions about what their property is. And then when the markets are good, they're saying like, wow, these Mako guys are really doing great. When the markets are bad, it's like, oh my God, can you believe these Mako guys? I can't believe they're doing this or that. And the fact of the matter is, it's the same stuff, right? It's like what we're doing in 2019, 2020, 21, and 22 has been identical and consistent. But it's like people can frame that information differently depending on the views of the broader gold equity markets.
I think that's every management team, though, right? Put out a study, don't put out a study. They keep drilling, drill more, but don't raise money. Like,
right, but the big thing, and to companies that need to raise capital, when you lock in that capital raise price, you're permanently changing what your company is going to look like. For us, it's like we haven't needed to raise money, and certainly on the equity side for now well over 2 years. I might be frustrated, so I might put out more sarcastic tweets on a given week during bear markets than bull markets. But other than that, it really doesn't change anything about our business model.
Talking about the structure, can you provide an update on the share consolidation or plans for share consolidation?
So a 1-for-10 has been approved by shareholders as of last week. It will go into effect in conjunction with an uplisting. There's flexibility on what in conjunction actually means. So like a shareholder asked me a couple of days ago, is this a requirement for the TSX that you do in a reverse split? No, we can do a reverse split on the venture exchange anytime we want. But it's going to be in conjunction to the uplisting. The only reason why we haven't put an application for the uplisting is that probably the most material thing that we need to be able to do consistently is file our financials in a 2 or 3 week quicker time frame than what we have been. We had a new partner over at PwC come in for Q1, which actually caused some pretty major changes on how we were doing some of our modeling. So if you notice, when we filed our Q1, it was literally within 2 hours of the deadline for a venture exchange. That kind of like put me a little bit in
I remember that.
Right. So I think this is going to be a good test case for shareholders for Q2. There really shouldn't be any major surprises on this. The same partners there are on Q1. I think we're scheduled to file it on the 16th. I think maybe the 15th. So if we don't file, so if we file on the 15th or 16th, that's going to be a very good data point that I think we're ready to submit our application for the TSX-V. If you're a shareholder, you can write this down. If we're not filing until the 22nd or 23rd, say, guys, these guys need to spend another quarter getting their act together. So I think this is going to be a good trial run for where we are.
Should we be expecting a drop in on sustaining cash costs for Q2 compared to Q1?
We haven't seen any like a reduction in cost. We haven't seen the acceleration on the inflation front as well. So you saw our production numbers, like mining rates were basically the same, processing rates were basically the same. Our production was a few hundred ounces lower quarter over quarter because some of the recovery issues that we were having. And then the modeling is going to be the same. So the net from Q4 to Q1, there was some weird depletion modeling that went. Who knew that that a non-cash item of depletion actually affects your cash costs? But apparently it does. The Q1 to Q2 there is not going to be the noise, but you'll see where the numbers come out. But there shouldn't be any surprises based on what the production results that we put out. Now I will say this, is that there is a lot of flexibility on how companies report all-in sustaining costs. Even though there shouldn't be, there's a very, very clear methodology that's laid out by the World Gold Council, but it is all over the map. And it's not just like the items over here. There are things that, and just like going back to the geological modeling we have, and we have these situations where management teams can go out and decide to have a number to kind of cement it in their minds in terms of making this like a marketing tool as opposed to reality. So one of the things that it's a good test case, and there was like a senior mining company that did this. I don't want to point them out, but if you report your all-in sustaining costs, and just like at the gas station, it ends in 99. So if you did 1199 or 1099, that's probably a good sign that the management teams were playing around with some of the decisions that they can control on the AIC. We reported 1104. That's a good sign that's saying, all right, whatever the modeling comes up with, like we care about cash. So I caution investors is that this is a technically complicated industry. Just because somebody puts out a number in front of you, you do not necessarily have more information than you did without that number. So look at the cash, the actual AISC. I think there's so much flexibility on how management teams can report that the use of it is limited in my mind.
Fair enough.
And by the way, and on this, we always include overhead and G&A. So I saw there's one midterm mining company that just ignored overhead on it. So look, we reported $1,300 all-in sustaining costs. If you ignore $200 worth of costs that the World Gold Council put on bullet point number 5 on what all-in sustaining costs are. So even at the senior level, people play around with these numbers and don't think that you have more information because you have a number like this. Look at the cash.
Yeah. Okay. Well, I don't have any other questions from the audience, and I don't have any questions myself. Is there anything we missed today, Akiba, that you wanted to touch on?
No, always feel free to ask any questions. So we got the mine up and running. There's a few things that we still need to fix and optimize. The exploration program is going better than expected. We are what we are, and we're going to try to use this to our advantage, because in terms of companies in our snack bracket and kind of where we're trading at, we actually are in an advantage situation. We have infrastructure, we have mines, we have cash flow, we have all the runway that we need for our internal growth programs, and it puts us in an enviable position as we start to look externally as well.
Mm-hmm. Well, congrats on just over a year of production. It's been great. You've done a great job building the mine during a difficult time. Like you said, 2 hurricanes, a pandemic, closed borders. I think I look forward to seeing the expansion if it happens next year. I hope that goes a lot smoother, and I think it's interesting times for Mako. I do see one more question come in. What do you see the impact of upgrading to the TSX as being?
So what it primarily does is it increases the types of investors that can invest in you, namely on the retail side of things. And then from a mechanical point of view, and I made this comment 2 years ago when we were first contemplating this, and everybody got triggered when I said this, but it actually allows you to be margin eligible. So first and foremost, do not buy Mako on margin. Like this is a very risky industry. This is a very there's a lot of risks, idiosyncratic risks associated with our projects. So don't buy it on margin. But the fact, if Mako was marginable, it actually changes the nature and the underlying liquidity and who can invest in, how they can invest in, how eventually you can write derivatives against it. It opens up the door for a lot of incremental liquidity on the name. So I do think it's a big deal. It's not going to be a panacea. So don't expect like a reverse split upgrade to the TSX. And then all of a sudden we're trading $1 million a day, and then we're going to be inserted into the TSX. It's not going to be like that, but it will have an incremental improvement technically on being part of the TSX, or any big board for that matter, a US exchange as well.
That's all I got. Akiba, thanks for your time.
You're welcome. Always appreciate it.
And if anyone has any further questions, feel free to reach out. I'll get those answered. If anyone wants a one-on-one call, again, just feel free to reach out. If you're not following Akiba on Twitter, I would recommend doing so, because you will get a lot of updates from the site and what's going on. And it's also very amusing. So yeah, with that, thanks everyone for participating. Thank you, Akiba, for your time. And I hope you all have a good afternoon.
All right, take care.